Okay, guys, welcome to another Level Up Mastermind with yours truly. Today, as you can see on the screen, we're going to be talking everything revenue share and kind of going over the model. And I think what's important about this is that number one, stick around to the end of this because I've also got a great website resource for you guys to use, especially when chatting with agents that are wanting to know what the possibilities are and what's the reality of if I had this many in this level, how much money would I make here on like a gross level? So finding out exactly what that comes out to. And as you can see, that first line, build monthly leveraged income. And also, real quickly, feel free to unmute yourself. If you have a question about any of this, please stop me. Or also there is the option to do the little raise your hand. You'll see that option on your phone. It's under the reactions. If you just hit raise your hand, it'll pop up on my screen and I can stop and we can go for it. All right. Okay, so build monthly leveraged income. One of the beautiful things about real estate is that I've always been a big proponent about building monthly leveraged income. You guys know I love investment properties, so I love mailbox money, I love passive income. Well, a lot of times agents are really bad about this. They actually don't invest in real estate a lot of times because they're just really busy selling, making commissions, and it's completely fine. It's a very noble profession. I'm in it right now, as well as you guys. But I feel like it's very important to always start as early as you can on figuring out how to build leverage in your business. Okay, so you've got rental income that people pay either the 1st or the 5th, the 15th or the 30th, but it's coming in every month because they've signed a lease with you and they're renting out your property. Now, in order to obtain that property, you've put anywhere from, if it was your original home, you may have put 3% down, or if you're buying it as an investment property, you probably put 20 or 25% down. And so there's always a significant amount of money, whether it's 3% or 20%, that goes into that property. And so if you're a new agent, you're like, man, how can I just get right into this without having the profession for 2 years? How do I build a monthly income that is not predicated on my monthly activity of showing homes and selling homes? So that's how you have to think about this, is like, how do I invest and how can I invest with basically, I call it no money down, right? So EXP has introduced this amazing revenue share program. So at most companies, you've got the structure where you've got your someone comes up with an idea, like a Keller Williams or a Dave Liniger who created Remax or a Century 21, and then they go, hey, we're going to build out a franchise model. And then in that franchise model, they're going to create an international brand underneath them. That's what they're going to create. And then they're going to go find people that are going to they're going to go find investors, not agents. They're going to go find investors, and investors want to buy the franchise model, and then they want to go out and they want to find more investors to purchase within those regions that they've purchased. And then those region owners go in and they build out market centers like you see with Keller Williams, or different franchise offices like Berkshire Hathaway or Century 21, Coldwell Banker. So whenever you see a name that's like, in our area, we have Preferred Real Estate, which Berkshire Hathaway Home Services, and then their franchise that's the franchise name, but their real name is Preferred Real Estate. Or you have in Columbus, you have Ken and Parker, Duncan and Davis, which is a franchise owner of Coldwell Banker. There's the same thing like Coolest Realty, Coolest under Century 21. So if you kind of get that model, those guys are investors in a franchise, right? And so with all that said, everyone's spending money on the way up, paying the person above them that they have invested in. Now, how do they make money, right? So they go out and they recruit agents. And they're recruiting agents and they're making their money based off of a split with those agents. That is the traditional model of real estate, right? So at the end of the day, the agents are the ones that are the foundation of the business, that make all the money, that pay for the franchise, for the regions, for the franchise tag and all that. But at the end of the day, that's fine. But they're not partners in the company. That's the big problem, is that they may have to be with Remax for 10, 15, 20 years to save up enough money to invest $200,000 into purchasing a franchise for Keller Williams, which is the typical franchise fee to start a franchise. So it's a big, big investment, right? EXP has created the model. It's a new cloud-based model that allows for the agents to be the owners. And we also receive a residual income from that when we attract agents to the company through this revenue share program, creating a monthly passive income. And that's the beautiful thing about it. And we can get into how that looks, but or as far as like the model. But today I'm really focused just on the rev share part of it. So building monthly leveraged income. So we're going to read that first paragraph. EXP recognizes that as agents, we have ownership in the company and we are compensated through the revenue share program when we attract other agents to join and help grow EXP. We are one company, both nationally as well as globally. So you can sponsor agents in any state in the US and in any country where eXp does business, unlimited growth possibilities. The last sentence is really just a hype sentence, but that's the big mindset shift you have to change in real estate, is that we are one company, we're not a franchise. We're just not a franchise, because you become an owner of the company and it's just one big, it's the largest, fastest growing independent brokerage in the world. So if you have friends or family that is located in another country where eXp Realty has set up shop and started business, like Mexico or Spain or Canada, Brazil, they're about to open up Poland. We've got Hong Kong, which is going to segue into opening up China, which is going to be huge. And so you can get rev share from all of these countries and how that operates, okay? So understand it's not just a local thing. And that's part of the pain point of owning a franchise, is that you may say, oh, I own a whole company, but in reality, you own a company within a very small area, right? You are still bound to an area. And so it's very important to understand that, because with EXP, you now have a global reach. It's literally an unlimited reach, other than just the countries that we don't operate EXP in. So like I said, we're about to open up Poland, and I think there's another one in South America that's about to open. All right. So when you attract an agent into the company, what does that mean? That means you have, let's just say you're doing a transaction and you had a good time with the agent. Doing the transaction, you got to know them pretty good on a personal level, and you say, hey, I think, have you ever looked at the EXP model? You should check it out. And let's just say they have some interest and they check out the model and they decide that, hey, you know what? I think the EXP model is right for me. And they come over to EXP. What happens is that when they sign up, they put your name as their sponsor into the company, which is just very important to have that as the person that influenced them to come into the company. And when that happens is that you have now become their sponsor. And also the biggest way to call that is a business partner, because as soon as they do their first transaction, they will become a shareholder. So I think you get about $200 worth of shares on your first transaction at eXp Realty, and then you become a shareholder in the company, which makes you one of the owners. So the more people you attract, the more shares you get, the more of an owner of a bigger owner of the company you are. So it's not one of these where you join a franchise, you do business for 10 years, you decide you don't want to do it there anymore, and you walk away, you have nothing. Here, every time you do a transaction, you're getting more and more shares within the company based on their production. So when you sponsor agents into the company, you can receive revenue share income from the sales activity of their producing agents. The revenue share is paid out directly from the company's 20% split, and not from the sponsored agent on every transaction until they cap. So when I first looked at this company, I made a big mistake I kept thinking, I was like, gosh, why am I going to continue to pay the person that sponsored me? And I kept thinking, why am I paying them? Why am I paying them? And then I realized after about the fifth time of looking at it, dummy, they're paying you, EXP's paying you, not your sponsored agents. So that of course, when you come to EXP, it's an 80-20 split. So 80% to the agent, 20% to EXP. They pay you out of that 20%. So the person who is sponsored is not paying you out of their 80%, which is great. So eXp has what's called a 50-50 initiative in the company, since it's publicly traded, is that 50% of revenue will be paid out to the sponsoring agents for 7 levels, okay? So it's a 50-50 partnership or split where 50% of all revenue within eXp will be paid out 50% to the agents. Now, if you were with us at the beginning of the year, you actually got a dividend from the company because we were slightly unbalanced. I think everybody received a small dividend, which go find that at any other company. So they paid us a dividend at the beginning of the year because once they balanced all of 2021, they found that there was an imbalance of that 50-50. And so they took that extra funds and they paid it out to all of the agents. So I believe they paid out well over, I think it was like $170+ million in revenue share in 2021. I would double check that, but I'm pretty sure it's right around there. And I think it was 140 the year before. So keep going. Revenue share is paid out each month to agents participating in the revenue share program based on the previous month's closings. So we are paid on the 22nd of every month. So every 22nd, you will get a direct deposit into your account, and that will be based on the production of the agents you've sponsored from the month before. So if they have not hit their cap and they're still within that, they're still doing an 80-20 split, you are still getting paid. And let's just say that everybody in your revenue share group the month before did $10,000 in commissions. If you go down below and look at the revenue share overview, people in your first tier, you're going to get paid at a 3.5%. So 3.5% of a $10,000 gross commission would be $350. Does everybody understand that? Cool. So you're going to be paid at 3.5%. Okay. And let's just say that like you jumped into the business and you have a friend and you sponsored them into the company and they went ahead and found somebody real quickly that was like, hey man, if you're jumping on a boat, I want to jump on a boat. You can be my sponsor. So now we have one person in your first line and one person in your second line. Now, if you look at this, the way you open up tiers within eXp is along your first line. It's not a total amount of people in your organization. It's in your first tier here. So if you have less than 5, you will not collect, if you'll see right here, the 4% on your second line. What you will collect is 0.2%. Okay. And I'm going to show you this on a calculator shortly. I'm going to show you a couple different examples, and what I'd like for you guys to do is when we get to that, I'd like for you to spit out some numbers that you would like to see, and we can kind of maybe what we should do is figure out, what is your magic number for monthly income to step away from this business, and we can actually maybe reverse that out and see what that looks like from an organizational standpoint. So eXp's model pays out the revenue share in a clear and transparent way to agents who are growing the company, not based on profits, but direct revenue sharing. There is a big difference in profit sharing and revenue sharing. Will someone unmute themselves and tell me, or you don't have to, does anyone know the difference between profit sharing and revenue sharing?
Is profit sharing where you're taking directly out of the other agent's paycheck?
You're not taking from the other person's paycheck. Carter?
Well, revenue is basically just the top line dollar before all the costs are backed out. So versus profit, which is, revenue minus cost equals profit. So revenue is the top line overall income of the whole company versus after all the expenses have been paid. And then there's a cut taken out of that.
Correct. So yep, that's the difference. Thank you. So as you heard Carter, it is the top line revenue from the company. So out of that $10,000 total of commission, and let's just say this month is October, and let's just say that the revenue share, your group, anybody who came in that's sponsored under you or has those people you sponsored as their sponsor, let's just say that total gross commission was only $10,000. Then, let's just say they were all on your first line, you'd be paid at a 3.5%. It'd be $350 from the top line. If this was a profit sharing model we would most likely be doing something where, let's just take our team, for example. Let's just say our team was a brick and mortar company and we had a profit sharing model. And it's the same 7-tier system. If we had a profit sharing model, we would say, okay, we made $10,000 last month. And then we also had our company expenses, which I don't want to talk off of 10,000, but let's just say that the total of what our expenses were $5,000 for the month of September. That way you're left with $5,000 from that gross commission. And then let's just say that was the company dollar. And then out of that $5,000, we're then going to spread that out amongst the agents and do a profit share. So whatever the profit is, the revenue minus the expenses, the profit, then we're going to split that out. So as you can see, when you do that, the profit sharing model is not very reliable. And that's I think one of the biggest things for people to understand is that the profit sharing model is not very reliable because that's a very dynamic and it's a moving number. You could have high expenses one month, you could have low expenses one month, you could have high gross commissions one month, you could have low gross commissions one month. And so as those continue to go up and down, it's a very unreliable share of money. Whereas if you do a revenue share program, we have the first line at 3.5%, which if you look at the max potential, if you're looking at this this diagram here, this picture, it says max potential per agent is $2,800 a year. So what is $2,800? So if you took, let's just take a calculator real quick. If you took $2,800 and you divided that by 3.5%, you're going to get 80,000. Okay, so what does that mean? That means that the agent is doing $80,000 of gross commission a year. And so you go, okay, well, their cap is only 16K. So when they do a gross commission of 80,000, if you multiply that times 20%, that gives you their cap. That's the 80-20 split. Does that make sense to everybody? So a gross commission of 80,000, out of that 80,000, 20% that they've paid to the company is 16,000, and you're getting paid 3.5% of the 80. Does that make sense to everybody? Any questions about that? And so that is just explaining the first line, okay? So let me see real quick. All right. And then agents who build monthly revenue share can pass, or wait, let's skip the line. When an agent caps, then there is no further revenue share paid out to the sponsoring agent until the anniversary year starts over and they return to the 80-20 split. So as soon as the agent you sponsored has hit their $80,000 in gross commission, they've paid their 16K cap, and out of that 16K, you've received your $2,800, it stops. The beauty about EXP is that starts over every year that agent's in the company. And let's just say that the agent only does $40,000 in gross commission for the full year. At that point, you would receive what's called a half cap. So that would be $1,400 instead of $2,800. So it's the same exact numbers because you're getting paid out every month. And let's just say they only did $40,000 in commission, then you would only collect $1,400 in revenue share. And I'll show you that on the calculator. And it's actually got it broken down really nicely to show you guys what that looks like. Any questions about the 80-20 and how the revenue share stops at the cap and then it starts over? Any questions about that? All right, we'll just keep reading on. Agents who build monthly revenue share can pass that income stream to beneficiaries upon death. This is the part that if you've talked with Gusty Goulas about eXp Realty versus other companies he's looked at, this is actually one of the biggest things that you can really compare to most companies that makes us an orange to an apple. So it makes us very different. You can pass revenue share income stream to a beneficiary upon death. So what does that mean? That means, like, if I had a revenue share group and I was making $50,000 a year from my revenue share group, then if I walked outside and, God forbid, get hit by a Mack truck, then my wife or my kids can go get their real estate license. They have a certain amount of time. It's either 6 months or a year, but EXP will work with you and your family. And what they will do is once you have a beneficiary that assumes your revenue share, they pick up where your line is. Okay. So that's one of the beautiful things about EXP. And it's one of the things that I really liked about this company when I looked at it, because if you work for another company and something happens to you, you know, Remax or Century 21, they're not going to come in and tell you that, hey, you know, I hate what happened. We're going to continue to pay you out. They're just not going to do that. It doesn't happen. With EXP, it's actually a willable asset. So it's one of the only companies that will allow you to actually grow a true asset as a real estate salesperson, which is one of the, probably for me, it's the most attractive thing there is about EXP is that I feel like it's a company that's very family centric. They care, and they want you to create generational wealth, right? And so creating a legacy for your family. And so you can do that here at EXP, which is one of the great parts about it. So we've kind of covered how to build your revenue share within the company. And we've only talked about the first tier. The good news is that that actually goes on for 7 tiers. And what this means right here, and I think it's going to be better when I show you, but I'll just go and explain it, is that, like I said, if you have people that are multiples, let's just say you only have 10 people in you have 5 people in your revenue share group in your first line that you have personally sponsored. If you have 5, it only opens up the full potential exponential share of the 3.5% and the 4% in your first and second tier. Okay. If your second tier has a sponsor like me, I don't collect the 2.5%. I collect it 0.1% of that gross commission for that line. Okay. So if you add all of these up right here, can someone add these up? Let's see. You've got 2,800, 3,200. That's 6,000, 8,000. Then you've got 12,000, 14,000. $16,000 total, right? So if you add up the max potential earnings of your revenue share program, it's a total of $16,000. So just so you guys kind of understand, where do these numbers come from and how do they deliver this? One note about this that I really like is that it's not very, just the reality of it is that it's pretty rare. It's very rare in the company to have over 40 people that you have directly sponsored. There's plenty of them that have them, but just the reality of it is that most people have, you know, if they're doing, which under, they said out of the 85,000 agents, less than 20% of the agents within EXP actually participate in the revenue share program. So understand is that you're not really competing with 85,000, you're only competing with 20%, which is about 16, 17,000 people. In revenue share. And then most people, which I think this is one of my favorite things about this, is that actually at tier 6 and tier 7, since these are kind of a rare air type area, they actually pay you at 0.5%, which is a lot higher than the first 5 tiers, which I thought was pretty cool. So kind of a note on that. All right. Any questions about this page? Because I'm about to hop off it and show you guys what that really looks like. River, hold your peace. And all right, I'm going to stop sharing this for a second and share another screen. Let's see, where are you, calculator? All right. Now, this is pretty cool. So if you go to fast forward revenue share calculator.com, and I can send you guys all this link. This is a link that gives you what this looks like. So you're going, okay, Alex, you've done a lot of explaining. What does it look like? All right. Let's just say you have 35. Let's just say you're a high producing revenue. You have a big revenue share program. You sponsored 35 people. That's not 40. You've got 30 in your second line, 10 in your third, 5 in your fourth, 2 in your fifth, 1 in your sixth, 1 in your seventh. If you take this across, you'll see the red is not applicable, but the green is. So you've opened up these lines because you have 35, right? So it takes, or you've opened up, yeah. So you've opened these up and then you've got the totals here. So assuming that every agent in your organization is capped, which is pretty rare, actually, I don't think it ever happens this way, will be 224,000. If there are 3/4 caps, it's 168,000. If assuming that everybody in your organization is a half capping person, that's $112,000 a year. And then if they're all a quarter cap, it's $56,000 a year. All right. I mean, I'm sorry. This is, yes, total a year. So if they're all just a quarter cap, you'd be collecting $56,000 a year. So this is just a recommendation. What I'd like for you guys to do is tell me some numbers that you would like for me to show you. Because what I'd like to do is kind of back this out and kind of start fresh. And let's start like a new agent. Let's talk about maybe some goals. What are some goals that you guys have for revenue share, or how many people you'd like to sponsor? Just throw out some numbers.
I think it'd be cool to be able to, pay at least like a mortgage and bills for your house. Let's
Okay.
just say $1,500.
$1,500 a month?
Yeah, that would be great.
Okay, cool. So I think that's pretty simple. Let's start pretty small. Let's just say you had a goal that you want to. You guys think 6 agents in 2 years is realistic? You guys think you could sponsor 6 agents? Yep. Okay.
Yeah, 6 and
I
2
think with
years.
the right
Yeah.
focus, yeah.
Okay, so 6 agents. Let's just say you sponsor 6 agents, okay? And let's just say your bills were what, $1,500 a month times 12. That's $18,000 a year is what you need. Now, let's assume that every person that joins your organization is a half cap. All right? And let's just say that you sponsored 6 people, and out of those 6 people, they sponsored 6 people. There you go. I think that's a good way to look at it. You really only need 12 people, but you definitely need 5, at least 5 in your first line, because you won't collect the 4% on the second level until you have 5 in your first. Does that make sense?
Gotcha. So basically, all the people that come in, you would either your first line people bring them in, or
Correct.
if
So-
you personally bring them in, you can put them up, which will allow that
You
second level
can,
to open up.
yeah, just depending on kind of your strategy, however you kind of feel like you want to do it. If you want to have people say, like as we build out a team, like having people come on the team underneath other agents on the team and stuff like that, you can definitely stack your lines if you want. Realistically, so I have, let's just say, well, I have, how many in my first line? I have 11 in my first line. In my second line, I have, let's see, I have 11. We have a total of like 25 people. So I think it's 11. And then in my second line, Mary Gill, how many people have you sponsored? I forgot. It's, I think it's like, let's just call it 8. And then, so that's 8, 19. And then let's just put, I think there's like, the rest are all on my third line. So that would be, just call it 4, whatever. So 8 and 4. So right there, that's a pretty standard looking thing. And I do have 5 capping agents in my first line. I do not, but see, I've got, in my first line, I don't have, it's not 11 capping agents, but I do have, I've got 6 people that qualify. So let's talk about, that's something we actually didn't talk about in this. Let's talk about FLA versus FLQA and what that means. So FLA stands for first line agents. So line 1 means you would have first line agents. I have 11. Okay. I have 11 agents in my first line. And then FLQA is first line qualifying agents. So even though I have 11 in my first line, that doesn't mean that I've opened up both these lines necessarily. I have to have what's called FLQAs. Okay, first line qualifying agents. I have 6 FLQAs, which has opened up full revenue share potential for the first and second line. And that FLQA means that you have an agent that's, I think there's minimum requirements. Let me just look it up real quick. FLQ. I just want to make sure I give you guys the exact first line qualifying agents. There we go. Can you guys see my screen still?
Yeah.
Okay. So FLQA right here, agent compliance. Frontline qualifying agents. An agent has personally sponsored into their revenue share group and has met production or participation benchmarks. An FLQA number is used to determine an agent's eligibility and cascading revenue share. Now that did not tell me how much they have to produce, and I'm pretty sure it's 2 transactions a year, so it's very minimal.
Yeah, I'm pretty sure that's what I was going to say, because I met with Raman last week and that's what he said.
Yep. So, so there's FLAs, first line agents, and then FLQA. I did learn a new term. It's called a straw agent. I learned this last week. So a straw agent will be someone that is a sponsored agent that does 0 production. That's a straw agent, which I thought was kind of neat. And you can also qualify through referrals, I found out as well. So you don't have to be like the legitimate agent that closes the deal. You can actually qualify through referrals, which I thought was pretty interesting. So I think it's a certain dollar, even though it's 2 transactions, I think there's a minimum dollar amount on that to be paid in. I think it's something like $200 maybe. It's very, very minimal. And so let's go back to the calculator. So this calculator, let's do some fun numbers. Let's have some fun with this. Let's just say you've been with a company and everyone says that 100 agents is really the tipping point. When we were at it last week, the tipping point would be 100 agents in your organization and what that means is that's the tipping point where 100 agents underneath in your organization, it starts to kind of take a life of its own. And let's just say, like, definitely one of my goals is to have 100 agents in our organization. And let's just say I've personally sponsored 15 in my front line, my first line. And then what's another number? We can go with, let's just say there's 40 in my second line. And so that's 40, 55. In my third line, out of those 40, and that's kind of the cool thing you gotta understand is that in reality, this is what happens. You have 15 agents that end up sponsoring, like you may have one agent that doesn't sponsor anybody, another agent that sponsored 5, another agent that sponsored 15 that's absolutely an animal at agent attraction. And so what happens is you have a low number on your first line. Your second line is going to be pretty big. Your third line is going to be really big, and it's going to continue to grow. So that's 55 agents. Let's just say those 40 agents that you brought on, they brought in another, let's just call it 35 agents. Let's go low. So that's 40, 35, 75, 80, 90, and then you've got 5 and then 5. Okay. So let's look at what that looks like. Let's just say you brought in 100 agents total, and you only had your first line, you had 15 qualifying agents. Assuming that they were all full capping agents, you would actually make almost $250,000 a year. For me, I will absolutely take this half cap all day long of $123,000. So that to me makes a lot of sense, and it definitely varies. What Jesse, so just getting back from EXPCon, some of the things that I heard come out of agents' mouths is that for each agent that you sponsor, on average, when your organization gets really big, is that you can plan for collecting $60 a month on that agent. That's the average total. So if I took 100 agents And let's just see how that's $6,000 a month times 12, $72,000. That's what he said that you can basically bank on your organization. So as far as like a minimum standard, as far as like if you were planning this, and so that would put them just a little over a quarter capping agent, which hopefully you've done a good job in training agents and doing transactions that it's much higher than that. But that's what Jesse has said. I know it was different for a bunch of different agents, but that was actually the lowest number I heard. So I just kind of wanted to share that. Any questions about this calculator or anything about revenue share that I can answer? Just go ahead and unmute yourself. No? Man, I'm good. Everybody good? No questions. Solid. Let's just let me do this. Let's do an example where you recruited. I'm going to do this real quick. I think this will be fun. Let's zero these out. And let's just say
he also has a good calculator that he sent me that I said Ramen has a calculator that you can use on your phone that's a little bit more user friendly that I can put in the group chat.
Yeah, that'd be good. What is it? Let's just say you sponsored 3 agents. And those 3 agents, let's say you had 1 agent that hammered out, that attracted 5 people. And out of that 5 people in your second line, they collect another, let's just call it 5. Let's do a small number, $13. So at a full cap, you'd be collecting $9,200. So just to give you guys an example of this. So I know one thing that I compared at the beginning was income property versus revenue share and creating monthly income. The reality of it is that depending on your investing goals, when you buy an income property, typically you're going to make anywhere from, depending on your goals, I've even seen investors say, I only want to make $50 a month, but realistically, you're talking about if it's a property under around $50,000, you want it to cash flow $100. If it's a property between 50 to 75, you want it to cash flow $150 minimum. If it's a property between 75,000 to 100,000, you'd like for it to cash flow about 175, 200. And then above that, of course, you keep going up. But the reality of it is that if you're a really savvy investor, most of the time you're making less than $400, $350 a month on one income property. So think about how many income properties it would take to even hit this from a minimum standpoint. And let's just say that you were collecting $4,600 a year. I think that's a good number, the half cap. Let's go $4,600 a year. And let's just say you were cash flowing $200 a month. It's probably more. Let's just say you're cash flowing $200 a month. 200 times 12 is 2,400 times, let's see, 4,600. So you would realistically need 2 investment properties cash flowing $200 a month in order to do this. So let's say that they are $200 a month and you need 2 of those properties and your down payment's 20% on those 2 properties. And let's just say that those properties, they're going to cost you in this area 100 to 125. So let's go on the low end and just say 100,000. So that's, you're going to have to put down $20,000 times 2 is $40,000. So you have to save $40,000 in order to make $4,800 a year. Okay. Do you guys see the big advantage that you have here? is that you can continue to save that money. In fact, you can save your revenue share money to go buy investment properties if you want. But the barrier to entry is literally nothing to get into the revenue share program. And that's what I really, really like about this. And it's a very attractive way of doing business and to diversify your income, because once you're a part of a major shift in a market, and let's just say you lose all of your commissions for a month, how are you going to supplement your income if you don't have the investment properties already in place? Well, you can do that through revenue share. So any other questions about that? We're at 50 minutes in of this. So if you guys don't have any more questions, then we're going to go ahead and end this. But any other questions or comments about revenue share? Anybody have any goals in revenue share? No goals? Judson, do you have any goals?
Yes. One, I'm still working on that one guy, but I'd like to probably hit 3 next year.
That's good. Have you guys figured out your magic numbers for what it takes for you to retire?
Yeah, I definitely would like.
For me to fully retire, it'll take about 400 agents. So what you do is you take all of your expenses and figure out how much would it cost for you to zero base your life, basically, like your car payment, your mortgage, your bills, your food, all that stuff. And there's another calculator that we can use for that. You guys can get with me about that if you want to do that. Also, there is a really cool chart you can use called the wealth chart to track it all. I actually use one, and I've got it. It's about 4x2 in my house, and it's laminated, and it's got sticky notes all over it. So that's kind of how I track everybody in the organization and kind of how that looks. But remember, you can't measure what you don't track, right? How about you, Kayla? Do you have a number or anything?
I would like to get 2 at the end of this year, which is a big goal for me, but
Good.
long term, I don't really know. I need to honestly make a goal, because it's kind of been one of those things where I'm like, oh, it's too scary. I don't want to think about it.
That's right.
But this has helped. So I know
Good.
it's not scary. It's just a matter of doing it.
Good. Sophia's going to have people all over the planet. So, Alexa, do you have any goals, Sophia?
I need to see too what it would take. Like you said, I don't want to retire necessarily, but just what it would take. Like you said, if you had a tough month, better yet. But I would say, I mean, mine was 3 for next year. I like the odd numbers.
Okay. So what we should do is, what you're telling me is that we should have actually just a session on everyone figuring out what their number is.
Yeah, I think so, because I think everybody's goal is different on like what they want that number to come.
Well, I think everybody's number is naturally different because your costs aren't the same, right? So
Yes.
It could say it takes me 25 grand a month to live my lifestyle, or it could take me 10 grand to live my lifestyle. So whatever that number is to get to financial freedom is really what you're wanting to know, what that number is. And then you can actually reverse engineer, how many people do I need on my first line? How many people do I need on my second line? How many do I need on my third line? So I think that'll kind of help bring some clarity. And, of course, you're in production, which is your regular income as far as commissions. But at the same time, it will subconsciously be back there, and you'll then be going, man, there's opportunities right in front of me, doing transactions, talking with other agents, going to networking meetings, to have those conversations. And I think that's one of the things, is that I keep it on my mind all the time, so I have the conversations naturally, and then it becomes a lot easier. You become more confident about it, and then it's not a problem at all. All right, y'all.
Yeah, I'd like to really do some like role play in or something like that to just talk through a conversation.
Yeah.
I think that would help me build a little bit more confidence in it, and also be able to just get in a rhythm of exactly how to lead somebody through that conversation. Because I think that's probably a big hurdle for not only myself, I'm sure it's for other people, is, what do you say? How do you say it? and how do you knock down objections? So the role playing is what I'd would like
Perfect.
to kind of put some focus on.
I will reach out to somebody that I think will hop on our mastermind and actually go through this with us, who's a master of it, that says, yeah, I think I can absolutely get somebody on here, and we could do a really big mastermind and have some Q&A, have a presentation done, have some objections out there. And that's actually where I've kind of gotten my confidence from, is just putting myself in a situation to ask people those questions. And then just repetitive listening on YouTube, of course. But I think we can get that set up. So we should do a session about figuring out what's your magic number. And then also we should set up another session with role playing. And I think that would be absolutely amazing. Deal? Deal. All right, guys. Well, thanks for hopping on, and we will see you guys on the next mastermind, or see you very soon.